Welcome to the third problem on cash budget. So in this third problem, we are going to look into the details first, then we are going to solve this particular problem. So on my left hand side we have a problem. Let's go through the problem. The following information relates to XYZ Limited. So the amounts are given in terms of 1000. You have given the details from February to September. Wages incurred, material purchased, overhead and sales figure. It is expected that the cash balance on 31st May will be 22,000. So May month closing cash balance is given. So this becomes the opening balance for the month of June. The wages may be assumed to be paid within the month they are incurred. So wages information is given. So the wages may be assumed to be paid within the month they are incurred. So which means when the wages have been incurred for the month of February, so they are paid within that particular month itself. So as and when the wages get accrued, the payment is made within that particular month. Next, it is a company's policy to pay creditors for materials 3 months after receipt. So payment for the creditors for materials is nothing but payment to creditors. So whatever the materials have been purchased, the payment for these materials will be paid 3 months after the receipt, which means February purchase of 20,000 materials, this will be paid after 3 months, that is March, April, May. In the month of May, the payment of February purchase of materials will be done. Similarly for March month purchase, so the payment will be made after 3 months, that is April, May, June. At the end of June, the payment will be made. Debtors are expected to pay creditors for material 3 months after receipt. So when it comes to the sales, so what is the sales has been done here, so credit sales, so we are going to receive the payment from our customers 3 months from the month of sales. So February month credit sales will be received in the month of March, April, May. In the month of May it will be collected. Now how much is the credit sales and how much is cash sales? We'll look into the next point. Included in the overhead figure is 2,000 per month, which represent depreciation on 2 cars and 1 delivery van. So since depreciation being a non-cash expense, while preparing a cash budget, non-cash expenses need to be excluded. So from the overhead figure which is mentioned here, that is 10,000, 12,000, 16,000. So we need to deduct 2,000 from each of this particular month overheads, because depreciation is a non-cash expense. There is a 1 month delay in paying the overhead expenses. So apart from removing 2,000 rupees from the overheads, so the payment also is going to be delayed. 1 month delay is there in terms of payment of these overheads. 10% of the monthly sales are for cash and 90% are sold on credit. So we need to now bifurcate between the sales, how much is cash sales and how much is credit sales. And the credit sales amount is going to be received 3 months from the month of sales. A commission of 5% is paid to agent on all the sales on credit, but this is not paid until the month following the sales to which it relates. This expense is not included in the overhead figure shown. So in the previous problem we used to calculate commission on sales. It was on the total sales. But here we will need to calculate commission on the credit sales, and that commission amount is going to be paid in the next following month. It is intended to repay a loan of 25,000 on June 30th. So this is one repayment that we are supposed to be doing in the month of 30th of June. Delivery is expected in July of a new machine costing 45,000, of which 15,000 will be paid on delivery and 15,000 in each of the following months. So July 15,000, August 15,000 and September 15,000. In this way the payment will be done with regarding to this machinery. Assume that the order facilities are available. If required, we are required to prepare cash budget for 3 months, that is June, July and August. Now even though we are given the details starting from February till September, but we will be preparing a budget only for 3 months time, that is June, July and August. So what are the earlier period information and the subsequent period information from the budgeted period it is given, so that may be basically helpful for us to find out which are the expenses and incomes which are going to be collected during this particular period. For that sake, they have given us some prior period information. So what are the working notes we are supposed to prepare for this problem? So in this we need to first understand how much is the cash sales and how much is the credit sales. So we'll prepare one working note for that. Payment of creditors again. So since there is a time lag in payment of creditors for materials, we are going to prepare one more working note. Then we need to also go for one working note for this commission because it is paid on the credit sales, and again there is a time lag in payment of the commission. So these are the three working notes which we are supposed to be paying, which we are supposed to prepare, and then we can go for preparing the cash budget. So let's start with one by one. So again, to save the time, I already prepared the formats, so directly you can go for the calculation part. So let me first take the suppliers payment of materials. So starting from February, I just go on recording 20,000, 30,000, 25,000 like this. 20,000, 30,000, 25,000, 35,000, 30,000, 25,000 and 25,000. So September month is not required because our budget period is only meant for these three periods. So before the budgeted period information is important, post budgeted period information we need not consider it. So the first working note is computation of amount payable to suppliers. We have written the amount payable to the suppliers for the purchases. Now according to the adjustment additional information, it is mentioned like it is a company policy to pay creditors for materials 3 months after receipt. Now if there is a 3 months time lag in payment, then February payment will be making in the month of May. So this 20,000 payment will fall 3 months, 20,000 here. Next comes March, 30,000 is paid in the month of June, 30,000. Next April, 25,000 falls in the month of July. May, 35,000 falls in the month of August. Now since our budgeted period is only June, July and August, so this payment is not at all important for us. So I just highlight it in the red text, which means we should not consider this while preparing the cash budget. Only these three time period payments are considered. Next working note is computation of amount receivable from sales, and 10% as the additional information goes, 10% of the monthly sales are cash and 90% are sold on credit. So first let me first write down how much is the sales figure. So sales February 30,000, March 40,000 is given. So let me first write up 30,000, 40,000, then we have 60,000, then 50,000, 70,000, 60,000, 50,000. So till August only I am considering. So out of this particular sales, 10% is cash, 90% is credit. So 90% of 30,000 I am supposed to calculate. Now since I put up the formula, I just drag it, which means 10% of all this we are supposed to write up the value, 90% of the sales figure we need to write up next. Now since the budget period is this, so I am going to only mark up this particular three values. So we are going to consider only cash sales only of these three period. Now what about credit sales? Now debtors are expected to pay creditors for material 3 months after receipt. So now since again we are going to receive the payment from our debtors, okay, after 3 months from the receipt, so which is at 3 months from the date from the month of sales. So 27,000 is the credit sales in the month of February. This we are going to see after 3 months. So 27,000 falls here. Next 36,000. Next 54,000 and finally 45,000 is collected in the month of August. So again this 27,000 we are not going to consider because it is before the budget period. Only these three figures are considered. So in this way the goods sold on credit basis to the debtors are collected in this particular manner. Next. So the next one more working note is regarding computation of sales commission. Now the sales commission, it is mentioned in the problem as 5% of the commission is paid to the agent on all the sales on credit. So in that case, first let me find out what is the credit sales, and in the previous working note we already prepared the credit sales information is available. So if I take up the credit sales details from February, so I'll just take up all these figures and put up. So since formula is there again, so I'll just write manually. So 27,000, 36,000, 54,000, 45,000, 63, 54, 45,000, and commission is 5% on credit sales it is. So 5%, 0.05 into 27,000, 1350. In this way I am going to calculate the credit sales commission on the credit sales, but this amount is going to be paid 1 month delay. So this expense is not paid until the month following the sales to which it relates. So since my budget period is June, July, August, so May month credit sales commission will be paid in the following month, that is 2250 is paid in the month of June, 3150 July, and 2700. Again these three figures I am going to mark, which means only these three figures are important for us, the earlier ones are not important. Now once our working notes are ready with regarding to all the three calculations, then we move on to preparing the cash budget. Now the opening balance, since we are preparing June, July, August, the opening cash balance in the month of June will be the closing balance which is mentioned here on 31st May. So opening balance is 22,000. Now under the cash receipt, which are the cash receipt that we have is, one is the cash sales, then collection from credit sales. So only these are the two items in this particular problem. There is nothing called as sale of any asset, so I just make it in a bigger way to record the information. So on account of cash sales, the money which is mentioned here, 7,000, 6,000, 5,000, 7,000, 6,000, 5,000. Collection from credit sales, 36,000, 54,000, 45,000. So these are the only items of cash receipts. So under the cash payment, I start with the amount payable, that is payment to suppliers or creditors, 30,000, 25,000, 35,000. So which is the working note I have already prepared. First I'll complete that part. Then payment of sales commission, 2250, 3150, 2700. Then I move on to again looking into the additional information. So we have completed with the cash balance. Then we have wages to be assumed to be paid within the month they are incurred. So which means the wages information which is mentioned here, in whichever month the wages have been incurred, the payment is made within that particular month itself. So June it is 12,000, July 10,000, August 9,000. So payment of wages, June 12,000, 10,000 and 9,000. So if you read the statement correctly, the wages may be assumed to be paid within the month they are incurred. So in whichever month the wages are going to be due, in the same month only it is paid. Next, it's a company policy is over, debtors over. Included in the overhead figure is 2000 per month, which represent depreciation. This we are supposed to consider. We'll look into it. There's a 1 month delay in paying the overhead expenses. Now we go for overheads. So payment of overheads. There's a 1 month delay in payment of overheads. So since my budget period happens to be June, July, August, so June month preceding to June month is May month. So May month overhead 14,000 is paid in the month of June. But out of this 14,000, 2,000 we need to deduct because depreciation is included. So 12,000 is paid in the month of June. Next, June overhead is paid in the month of July. So from 18,000, 2,000 we minus 16,000. Then July overhead is paid in the month of August. So 16,000 minus 2,000 is, we get 14,000. So in this way the payment of overheads is taken care of. Next, 7th adjustment is also taken care of. 8th one is taken care of. Next, 9th one, it is intended to repay a loan of 25,000 on 30th June. So I'll just mention repayment of loan in the month of June it is going to be paid. So 25,000. Next, delivery is expected in July of a new machine costing 45,000, of which 15,000 will be paid on delivery and 15,000 in each of the following months. So I'll mention here the payment of machinery installment. So July we are going to pay 15,000, then August 15,000. And the 15,000 is paid in the month of September, but that is not a budgeted period, so we are leaving it. Now having done all the payments and consider all the receipts, now let's go for balancing. So we'll close first June month. 65,000 is a receipt. Then let's take the payment total. 81,250 is the payment. So in case if the cash payment is more than the cash receipt, then we say it's a deficit or negative balance. So when that being the case, then what happens? So when you have a deficit balance 16,250, as the sentence goes, the firm can go for a overdraft facility. So when the firm can go for overdraft facility, how much overdraft facility it has to take up? So in this problem, the overdraft facility is adjusted to the extent of the negative balance. So 16,250, the overdraft facility is taken. Now finally the closing balance will be nil. Now having done this, what is the next month opening balance? Opening balance will be 0. We don't have any cash available with us. So again we take a balance, 60,000 total. Payment side, total payment comes to 69,150. Again the difference between if you observe the receipts and payment, so payments are more than the expenses, cash receipts. So again we'll have a negative balance here. So to cover up the negative balance, again we are going for a overdraft facility to the extent of 9,150. So the closing balance will be again 0. So next month again the opening balance is going to be 0. Next again when we take the total, 50,000 is a cash receipt, cash payment 75,700. So which means again we are having a negative balance 25,700. Again the firm has to make adjustment for overdraft facility during that particular period. Now from this particular problem, what one of the important learning is, by preparing the cash budget we got to know that the firm is going to have a deficit cash balance in all the 3 months budgeted periods. Some of the reasons could be like the cash receipts in these particular periods are not so sufficient to cover up the cash payments, and the company is also planning to repay the loan. It's also planning some capital expenditure in the month of July as such, where the payment is going to be spread for next 2 months time, 2 or 3 months time. So because of all these reasons, the firm need to understand that it has to make some temporary arrangements by taking the order facility to cover up the deficit cash balance which is going to prevail in that particular month. And accordingly, the firm needs OD facility more in the month of August, because it requires 25,700, then followed with in the month of June, whereas in the month of July it requires lesser of OD facility. So this will help the company in this way by preparing a cash budget, so they can understand whether they'll be able to have some surplus or deficit cash balance, and accordingly can they make some arrangement to cover up the deficit cash balance. So this is about the third problem. So next we are also going to take one more problem, so that we can understand all the aspects of the cash budget. This is about the fourth problem. Okay. A Limited started a business on 1/1/2015 with a capital of 40,000. So it's a new business. The estimated sale and purchases for the next 6 months are as follows. So in the next 6 months time, what are the various purchases and sales the firm is going to do? It is mentioned for us. 50% of the purchases are paid in the same month, and the balance is paid during the next month. So it is 50% cash purchase during the same month, and balance 50% will be paid in the next month. Of the sales, 40% is on cash basis. The balance is realized in the next month, which means if 100 rupees is the sales, so 40 rupees is the cash sales and 60 rupees is the credit sales, and this 60 rupees credit sales is going to be collected in the next month. The expense of manufacture comes to 8,000 every month. So every month the company is incurring the same amount of manufacturing expense. It purchased a machine for 12,000 during February, payment for which is going to be made during the same month. So there is a purchase of machinery in the month of February, and cash outflow of 12,000 is going to happen in the month of February itself. Prepare a cash budget for the 6 months ended 30th June 2015. So from Jan to June, it's a 6 months budget which you are supposed to prepare. So in this we are going to have only two working notes. One is payment to the suppliers, and also collection from sales. So let me take you first directly to the working note format. So at the top I mentioned is a computation of amount payable to suppliers Jan to June. So this happens to be my budgeted period also, and the firm has just started a business. So let's me put up the purchase details. 24,000, then we have 40,000, 48,000, then again 48,000, 52,000, 48,000. Now out of this, 50% is paid in the same month. 50% is cash purchase, which is paid in the same month. 50% is credit purchase, and the payment for this credit purchase is going to be done in the next month. So I'll just push this 1 or 2 rows down. Okay, so let me first find out how much is cash purchase. 50% is a cash purchase. So 12,000 we are supposed to pay in the same period, and remaining 50% is credit purchase, but this we are not going to pay in the same month, we are going to pay it in the subsequent month. So let me first calculate how much is the cash and credit purchase. Okay, so the cash purchase is done in the same month, whereas the credit purchase we are going to make 1 month delay. So accordingly, so this 12,000 credit purchase is paid in the month of February. Next 20,000 is paid in the month of March. Next 24,000 is paid in the month of April. again next 24,000 April, then 26,000 in the month of June. So this amount we are going to consider while preparing the payment for suppliers. So the total payment, because we cannot split two things, so I'll just make total payment to suppliers, whether it's a cash purchase, a credit on account of credit purchase, how much it is going to be in each of the months. If we calculate, that figure is important for us. So on account of cash purchase 12,000 plus, in this same month we are not having any payment on account of credit purchases, so it is 12,000 only. In next month 20,000 on account of cash purchase plus 12,000 on account of the credit purchase of previous month. In this way we need to keep calculating for next all the months, and this particular values are going to be taken directly in our cash budget. Okay, so next one is about computation of amount receivable from sales. So what is the sales figure? January we don't have any sales, then directly we have February 32,000, March 60,000, April 68,000, May 68,000, June 80,000. Now out of the sales, 40% is cash sales and 60% is credit sales. So let me first only bifurcate between cash and credit sales. January we don't have anything, just leave it blank. So 40% of 32,000, if I calculate, it comes to 12,800. 60% of 32,000, if we calculate, it comes to 19,200. Like this, I'm going to calculate 40% and 60% of the given sales to find out how much is cash and how much is credit. So the cash sales amount is collected in the same month, whereas the credit sales amount is collected in the next month. So of the sales, 40% is on cash, the balance is realized in the next month. So February credit sales amount is received in the month of March. So 19,200, next comes 36,000, next 40,800, again 40,800. Now these figures are important for us while recording cash sales and collection from credit sales. Now these are the only two important working note in this particular problem. Now having done these two working notes, let's go for preparing the cash budget. Okay. Now what is the opening balance of the cash? Since he is starting a business newly, so we have given here 40,000 is the capital with which he is starting. So we consider the opening cash balance to be 40,000. Then there are two items of receipt. One is the cash sales, one is collection from credit sales. So the cash sales collection is already given. So it is 0 in the month of January, February 12,800, 24,000, 27,200, 27,200, 32,000. On account of collection from credit sales, if you see, January is 0, February is again a 0, March 19,200, 36,000, 40,800, 40,800. Now when come to the cash payments, so payment to suppliers, I'll just take directly the green shaded figures because it is a total of both cash purchase and on account of credit purchase considering the credit period. So 12,000 we pay in the month of January, 32,000, 44, 48, 50, 50. So these working notes information is already captured in our cash budget. Now just let me take you to the other points. So here we have one more thing, that is expense of manufacture comes to 8,000 every month. So again I write here payment of manufacturing expenses, 8,000 every month we are going to incur. Then the company is purchasing the machine for 12,000 during February, and the payment also is going to be made during the same month. So I'll write here purchase of machinery in the month of February by paying 12,000. So it's a capital expenditure kind of a thing. So having done all these things, now the next task is just to do the balancing every month and find out the closing balance. So 40,000, 20,000, and here we find there's a surplus. 40 minus 20 is 20,000. So again this 20,000 becomes the opening balance. Again let's take a total, 32,800. Now here it is a 52,000. So this is going to be a deficit cash balance. So in this problem we are not told in terms of what the firm is going to do in case if there is some deficit balance, whether it's going to arrange for any overdraft or how it is going to plan for this. Nothing has been mentioned. So in that case we are going to just leave it as it is. So since there is a negative balance, so again it is not going to be taken care of. Means the firm has to do some planning at this particular stage. So the opening cash balance for next month is going to be 0. So again when you take the balance here, it is 43,200. Then again it is going to be 52,000. Again we have a negative balance. So in the event of there is no any information mentioned, so normally the firm has to go for overdraft facility, and accordingly it can cover up the deficit balance. But in this problem they have not mentioned what is the arrangement they are going to do. So our job is to find out what will be the status of the cash budget having considered in this given pattern. So again opening balance is 0. So 63,200, 56,000. So here we are going to have a surplus cash balance 7,200. So if there is a positive balance, that balance gets carried up to the next month. 75,200, 58,000. So 75,200 minus 58,000, 17,200. So again opening balance 17,200. Take the total, payment total, and then total receipts minus total payment, 32,000. So what we used to do in the previous problem was, since we had given there is an overdraft facility which the company can afford for, so accordingly we used to, whenever there is going to be some negative balance, we used to go for arranging for the overdraft facility. But in this case they are not mentioning this problem as to what the firm is going to do in case if there is a negative balance as so hence our job is to find out what is the surplus or deficit cash balance in the budgeted period. If there is a surplus balance, it becomes the opening balance in the next month. In case if there is a negative balance, so just keep it as it is. So by doing so we can understand that in the month of February and March, so if you observe here, the firm is in need of some they need to arrange for some cash because there is going to be a negative cash balance. And again in the interesting, if you observe here, in the first month the company was able to generate some extra 20,000 surplus cash, not account of any sales activity, but because they had started up just business with the capital, that is where the company was able to have some 20,000 surplus cash. So this 20,000 surplus cash plus the next month's sales, if you consider, the sales revenue is very low, but the payment for expenses is high, and even in the next month the company is planning to go for purchasing a machinery. So due to this, the company is they are having this negative cash balance. So this is how we need to understand by preparing a cash balance, cash budget, so we can at least foresee ourselves in the next 6 months time how our business is going to look. So these are the 4 problems which will give a hands-on experience for you to understand and solve how the cash budgets are prepared. So you can practice more problems on this one, and if you have any query, always you can send an email to my email ID, that is maheshb@globalbschool.in. Thank you.